Or are you currently wondering, which stocks should I buy right now to receive a lot of passive income and a lot of potential growth in the future? Well, in today's video, you'll find what are the 4 best stocks to buy in April 2023 if you're looking for high growth and great dividend stocks in those current global economic conditions. Without losing too much time, let's get to it right now. With the banking crisis in March 2023, we've seen that many opportunities have been shut to the eyes of the public. That's why for the first stock on my list, I've decided to went with the Toronto Dominion Bank with the ticker TD. TD is currently one of the 15 largest banks in the world in terms of valuation, and it is my favorite one. In fact, with this massive opportunity that I've seen with this kind of bank, I've decided to buy over 40 shares of this stock only in the month of March. So let me explain why. First, as you might know, as being one of the world's largest banks, TD is offering many kind of great services and products to their more than 27 million customers all around the world. From credit cards to bank accounts to loans and to mortgages, you'll find many kind of products and services from this great company. What is really interesting about this company is that it is also acting in a market that is mainly controlled by 5 big companies, and on their part, over 10 millions of Canadians are actually using this bank. Recently, they've also been talking a lot about trying to expand their US market by buying, for example, the First Horizon Bank. However, with the recent drop of the banking system and stocks, we've seen that this deal was actually paused because the initial price to buy and purchase the First Horizon Bank is actually at the moment too high compared to what is the real price of this company. On your side, by investing in that business, you are investing in a company that is offering close to 5% of dividends to their shareholders with the possibility to drip on it, and with a super low price to earnings ratio of less than 10, some great revenue growth progression over the last 4 years, and some insanely high profit and operating margin over the last 12 months, it might be an interesting pick to keep an eye on for you. For my second stock on my list, I've went in another dimension and I've picked a company that has lost a lot of value, notably in the last year because of the tech crash. And so I've picked the American giant Meta with the ticker FB. This company initially created under the name of Facebook by the infamous Mark Zuckerberg, currently worth over $400 billion. Over the last year, we can see that this company has lost a lot of value, but since the beginning of the year, it has regained some massive momentum. But why do I personally think that this trend will continue in the future? To understand this, let's check out what is their current business model. At the moment, Meta is making the biggest part of their earnings through the advertisement on their different social medias. And the good news is that they are currently controlling some of the most popular social medias in the world like Instagram, WhatsApp, and Facebook. In fact, on your side, you might be using at least one of these social media. And so they'll be making money from those advertisements that are actually based on an ad auction system, meaning that, for example, companies that want to put ads on Facebook will have a certain budget, and on their side, Meta can counter with how many impressions that this company can generate on their application. And lately, this company has also been working a lot on increasing their positions in the metaverse and in the artificial intelligence fields. In fact, they've even changed the company's name for it.
Yeah, baby!
The biggest part of their income generated from this branch has obviously been coming from their subsidiary Oculus, which are actually selling many different kinds of virtual reality headsets. However, at the moment, this branch is still far from profitable because it is still on search and development phase, meaning that this company is injecting and investing a lot of money in that branch to make it flourish over time. And to double down on this project, they've also recently decided to make some massive layoffs. At the beginning of the year, Mark Zuckerberg has also said that 2023 was going to be the year of efficiency for Facebook, where they actually want to become a stronger company. And despite not offering any kinds of dividends to their shareholders because they want to grow as much as possible the company, they still have some super low price to earning ratio of only about 25, which is pretty much lower compared to the average of the tech. And even if we can see that this company has been stagnating a lot lately on their total revenue, it still has a great and a strong balance sheet where it doesn't have too much debt compared to its total cash position. Personally, I still have a lot of hope for this company, knowing the fact that they are a giant in the social media field, which has become through time super important for our economy. And at the same time, if they are able to successfully develop their metaverse branch, it might be a great opportunity for the investors. Now for my third pick on my list, I've went with a company that might see a lot of growth in the future, especially if the e-commerce sector continues to boom, and it is the company PayPal with the ticker PYPL. This American multinational is considered as an online payment system which is pretty much used in almost every country in the world, and it is the most accepted digital wallet in North America and Europe. Over the last couple of years, we've seen that the good old physical shops have become less and less popular, notably because of the COVID-19, and it is where a company like PayPal can jump on the trend. Whereas most payment processors are working only with merchants, PayPal on its side is working with both merchants and the customers, meaning that PayPal is offering data to both sides of the transaction. This notably helps PayPal to increase their approval rates by also diminishing the potential of fraud. But just like Meta, this company has lost a ton of value in 2022. But this massive downtrend has actually been boosted by the fact that a couple of years ago, this company was growing as much as 25% of growth in their earnings per share per year, which has actually boosted their total price to earnings ratio of about 70 at that time. And if you mix that with the most recent earnings that were not performing as best as predicted, well, you potentially have a perfect recipe for a big disaster.
Oh my God! Okay, it's happening. Everybody stay calm.
And this has been translated in a loss of close to 60% over 2022. Nevertheless, with a current market cap of slightly less than $100 billion, but a price to earning ratio that has been cut in half, and with some great revenue growth progression over the last 4 years, it is one stock on which you need to keep an eye on for 2023. And finally, for my fourth and last pick, I've went with a company that has a lot more risk than the other 3 previous picks on this list, and so I've decided to plunge into a universe that has a lot of potential but also a lot of risk, which is the biopharmaceutical field. And so I've picked the company Verona Pharma with the ticker VRNA. This business focuses its efforts mainly into the therapeutical ensifentrine, which might be the first treatment for respiratory disease, which combines bronchodilator and anti-inflammatory activities in one compound. Now that I've shared with you my big medical knowledge, let me warn you. This company is far more riskier than the other 3 picks on my list. Indeed, with its super low market cap of less than $5 billion, you can understand that it doesn't have the same stability as the other companies. While the concept of high-risk speculation might seem pretty risky for some investors, the biotech field might be the next big thing. These lesser-known companies might not have the same popularity as some other big companies at the moment. Nevertheless, they could yield some tremendously high profitability over the next couple of decades, especially with the global aging of the population that is said to be one of the biggest challenges of the next couple of decades. These kind of companies might be one of the solutions for it. Another kinds of important factors to understand from those kind of high benefits, high risk plays is that even if we are currently in a crisis where, for example, banks were falling, well, the scientists will continue to make research on the problems because in fact the chronic disease as well as the medical innovation are not waiting for economic cycles to turn on. And despite the fact that this company is yet to be profitable, it has still been able to reach the attention of the investors throughout 2022, where it has gained over 200% of gains over that year. And another great thing that I particularly like about this company is the number of cash on which they are currently sitting compared to their debt, which is pretty interesting in those high interest rates where they are not depending on the debt that they have contracted, but also by the fact that they are also able to invest and inject massive money into the research and development for chronic diseases solutions. As you've been able to see, there are plenty of great stocks that you can buy right now in April 2023, but if you're looking to fly towards the future, check out the video that's gonna be right over here, and I will see you soon. Peace!